Mr. Verma, welcome to the show.
My pleasure.
In the MPC minutes that was out last week, you said RBI still needs to do a lot of catch up. The repo rate has been hiked by 90 bips since May. How much of a repo rate hike more you see in the current year in 2022?
You see, what I was highlighting is that inflation has been rising faster than the repo rate.
Right.
So yes, 90 basis points looks large, and it looks like very decisive action until you see that the realized inflation has shot up by much more than 100, and even the the projection for the entire financial year, which is forward-looking, even that has risen by 100 basis points. So that's why I said that in terms of inflation-adjusted policy rate, we have barely budged from April. Now either inflation needs to come down on its own, and if it does, obviously the real rate goes up without our having to do something. Or we will have to raise rates, or it might be a combination of the two, that as we raise rates, inflation comes down, and because inflation comes down, the real rate goes up, and then we end up in a more sustainable position. Right now, the real policy rate is quite strongly negative.
Right.
Not just based upon April-May numbers, but even based upon the entire 22-23 projected numbers, our repo rate is negative real. And I do not think the situation today calls for negative real rates.
So when do you see the real rates becoming positive?
I really don't know. Because, part of this surge in inflation that has happened is due to the Ukraine situation and stuff like that, which is global in nature. It's got nothing to do with domestic macroeconomic policy. So if that global environment stabilizes, if crude prices come down, other prices come down. We did see a large correction in metal prices, right, from the peak. Now, if crude also corrects, and if some of the severe shortages that we are seeing in things like semiconductor chips and so on, if those ease, then one would expect to see a significant drop in, and of course, if we have a good monsoon and food prices come down, because that's another thing which has triggered this inflationary surge. If a good monsoon leads to a drop in food prices and so on, then we could get a correction in food prices as well. And all of that put together could bring inflation down. And if inflation comes down, the task of the MPC becomes a lot easier.
How much of a growth sacrifice you think is tolerable in the current situation?
Well, you see, I think the situation now is very different from what it was, let's say in 2020 or early 2021. At that time, the pandemic was wreaking havoc on the economy. And it was absolutely unacceptable to worry about anything other than recovery, right? Today, I think the situation is different. The economic recovery is quite robust. Of course, we would always like faster growth, but the economy is doing reasonably well. And we are also at a point where I think inflation itself is posing a threat to the recovery. Because particularly when you look at how consumer goods companies are seeing the economy, they see the inflation and the shrinking wallet of the consumer itself as a big threat to demand. So when you look at all these factors, I think the MPC has rightly changed the priorities and is now prioritizing inflation over growth, and saying that the inflation is now in intolerable zone, and some modest growth sacrifice is inevitable, but we have to bring inflation down because that is causing bigger problems for the economy.
Some of the members have indicated that if MPC fails to meet its inflation mandate, which is to keep average inflation between 2 and 6% over 3 quarters, it is mainly due to the external factors, because 75% of the rise in inflation since February is due to the war in Europe. Do you agree with that view?
I agree with that, but I also think that when all of us joined the MPC, we joined it knowing very clearly what was the mandate given to it.
Right.
And the mandate given to the MPC was very clear, 4 plus minus 2%. And and 3 quarters. So there were 2 kinds of leeway given to the MPC. One is that you can deviate from the target. Target was 4, and you can go to 5, 5.5. You can go to 6, but you can't go beyond that. So that was one leeway that was given. Second leeway that was given was that monetary policy acts with lags. So even if you start doing something today, it will not bring inflation down tomorrow. So you need some time to deal with any event that happens. And the time that was given to us was three quarters. I think that however valid the excuse is, the MPC should not be trotting out that excuse. It is perfectly open to the government to say that, yes, we recognize the situation that has happened, and the government can condone that, saying because the inflation target is set by the government. But I do not believe that the MPC should be chasing excuses. The MPC should accept that this is what has happened. I also think that there was a 2% band given to us because of all these uncertainties, right? We can have developments from elsewhere, and we can have unanticipated things that can cause inflation to go out of whack. And the 2% was supposed to provide a zone of comfort for that. I think what happened was that the COVID pandemic forced us to use up much of that 2%. So we're saying that, look, in the middle of the pandemic, we can't bring it down to 4. We are tolerating 5. We are probably tolerating 5.25. And before we could bring it down, saying that, okay, now the pandemic is over, it's time for us to bring things down to 4. Before we could do that, we had the Ukraine shock hit us. So ideally, what should happen is that in every crisis, we use this 2% band to cope with the crisis and quickly bring it down back to the central target of 4%. And the moment we have brought it down to 4%, or if the shock is on the other side, brought it up to 4%. Yeah. There was a time many years ago when inflation dropped to almost 2%, right? And then the task is to bring it up to 4. But if in response to every shock, we are able to bring it back to 4%, that prepares us to handle the next shock.
Correct.
But if shocks happen in quick succession, or we are too slow to bring it back to 4% after a crisis, then it leaves us with very little cushion to cope with the next crisis. So I think what is important now is to bring inflation back to 4% as quickly as we can. And if the moment we do that, we would be ready to fight the next shock. Here, the problem was that COVID in Ukraine happened too quickly in succession. So we had not had the time to bring it down to 4.
Dr. Verma, it's a pleasure talking to you. Thank you for speaking to Business Standard.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
तुम इतना डर गए?
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.